Today, we're going to talk about KPIs. Oh yeah, that thing. So let's be clear, we're talking about key performance indicators here. A simple and easy way to measure your performance over time. The first thing we need to understand is that every single accounting practice out there will and should have its own unique set of them. Whether you're tracking your budget, your customer retention rates, or whatever, just setting clear expectations when it comes to staff accountability. KPIs are something that we all need. Think of it as a bird's eye view of your business, and in truth, the only metric set you need to follow. Oh, but Jeri, there's more to my business than a bunch of numbers. Nope. Sorry. Provided you capture the right data, then I swear to you, this is everything you need to make sure your business is running properly, that it's the most profitable, and that it tells you when someone is under or overperforming. KPIs are all you need to worry about. But how, Jeri? Fear not. Here are 3 pillars to creating banging KPIs for your accounting practice. The first pillar is to start basic and seek out problems. A simple spreadsheet is all you need to get going. Don't overcomplicate it, because that's when it becomes overwhelming and then it falls apart. A basic spreadsheet you create will be the central point to hold it all. Start by creating a couple of tabs, one for business KPIs and one for staff KPIs. Next, you need to seek out problems. Yeah. You heard me. Find things that you're rubbish at. To do this, you need to ask yourself a few questions so you can map them out. Think of things like, what is causing you pain? What in your business is not good enough? Maybe you're not getting back to clients quick enough. Perhaps there are too many payroll mistakes. Or maybe you've had a complaint from someone. That is where you need to start your KPIs from. Why problem areas, Jeri? I hear you ask. If there are problem areas in your business, something that is causing your business to fail or holding you back from offering the best client experience, then you want to identify it, track it, and improve it, and repeat. And remember, KPIs are and should not be static. They're ever changing with the environment and situation at the time. Otherwise, they become just another tick box exercise. If you're ever unsure if you're off track, keep in mind there is no point measuring something for the sake of it, and certainly not just because it looks good. These are vanity metrics, I'm afraid. So pop your ego back in the box. We ain't got time for that. Pillar number 2. Business metrics. If you're starting from scratch here, like we mentioned earlier, you need to look at what's causing your business problems, not quality of work. We'll get to that bit in a bit. And then look at what you want your business to achieve. Perhaps a problem is your timeliness in completing accounts, or response time to client calls. Or you could be looking to increase your turnover or the number of new clients you've got coming in each month. The best way to get a solid baseline is to look at what you've been doing and then look at where you want to be. Raise that target slightly, and that's roughly where you want to set it. With these in place, you can now create a plan for how you will achieve it. Let's say you want 5 new clients each month and you convert around 50% of these. You now know you need to be getting at least 10 new calls every month. Simple, right? Do the same for your other goals, your revenue, etc. And you'll be well on your way in no time. Remember, it's ever changing. So check in on these metrics monthly at the very least to review and monitor. Staff metrics, pillar number 3. Now for me, this is the most important metric of all. Why? If the staff are hitting their targets, smashing their goals and loving life, your practice will too. What's important to remember here is once you've created these KPIs, the staff fill in this section, not you. It's important for them to have accountability and to know their targets. Now, what you do have to decide on is who gets to see this spreadsheet. For me and my team, we all see them. There's a little healthy competition, it creates clarity and transparency within the team, and it also helps nurture a supportive environment where team members lift each other up and support them if needed. But, and it's a big but, this will not and does not work for everyone. Some companies feel their team prefer each having an individual spreadsheet that is private from their peers. They felt it was demotivating and didn't like the open and transparent point of view, and I get it. And that's why it really needs to be what works for you and your team. So for your team members, what kind of KPIs would you set? You can break down staff KPIs in a little bit more detail, specifically 3 areas, but please don't think you have to. Again, remember, we want to start simple. So even if it's just one, pick one and build it out from there. The main 3 categories are quantity, quality, and development. For quantity, we want to simply be listing out what the staff members' financial targets are for the year, and then break them down month by month. A simple list of staff names down the side and the months across the top will do. This gives you a really clear picture of whether they're on track with their targets, behind and need support, or right on track. Now remember, at times you need to take this with a pinch of salt. Let's say you've had a member of staff take a holiday, it could have been a quiet month, or perhaps they've been unwell. This is why we review every month. These can vary between staff depending on their level within your company, technical ability, the type of work they're doing. Some will be high value work, some will be low, so take that into consideration. An apprentice won't be doing the numbers that an experienced staff member does, so don't set them up to fail. But how do you know where to set the bar for the targets when it comes to money? Like most of us in business, we want to be looking at the return on investment. And this figure is roughly, and I mean roughly, anywhere between 3 to 5.5 times their salary. Sometimes it's lower, but it's a solid ballpark figure to begin with. Other things to consider when selecting your quantity KPIs are things like, are you going to measure the length of time it takes you to do accounts jobs? Maybe you'll set a time limit for all accounts to be reviewed by, or the amount of time to start working on a set of accounts. There are so many moving parts when setting a KPI, which is why it's best to find current issues and problems, establish your most important metrics, and simply build it out from there. The more you do it, the more you'll find, and the more you find, the more relevant KPIs you'll build. Now the second thing is quality. When it comes to quality metrics, this is more angled towards client experience and quality of work delivered. The greater the client experience, the higher the client retention rate and referrals. And you know what that means? Increased revenue and business growth. Now for this part, you want to look at what you already do as a business that you want staff to continue with. For example, do staff need to send a newsletter to clients on a regular basis? Are they expected to touch base with their clients proactively without being contacted first? Do they need to email or phone them a certain number of times? How many times do they need to do this each month? And of course, you know what I'm going to say, look at your issues and problems. We're only human, we all make mistakes, but in this business, that can be costly. So take a look at a few of the basics. You want to limit the number of problems as much as possible and go from there. Think about things like reducing payroll errors, or limiting errors on VAT returns and errors on tax returns. Now the list can go on, but really start to think about your specific needs. What are you called to give a bit of flex on, and what is an absolute no-no? The quality section can be super specific to you and your practice, so it can take you a bit longer to build this out. Again, don't worry, look at your values. What's the minimum quality standards that you would accept? How do you expect your staff to operate? And just go from there. And finally, number 3 is development. Your business can only get better when your staff get better. So consider how you will measure that personal development. Maybe you have internal training that they need to stay up to date with, or it's a number of webinars they need to watch each month. To get started, why not set a simple monthly target of a number of hours of development per month, no matter what it is. A quick gin down the pub, a great conversation where you learn from a peer, perhaps they learn something from a film or TV, you better believe that can count. So let's recap. Number 1, start basic and focus on your problems. Number 2, the first KPI should be the ones for your business. These will shape everything else to follow. And number 3, outline a simple set of targets for your staff. The perfect scenario would be quantity, quality, and development. But if that is too much, go easy on yourself and start small. Oh, and don't measure things just for the sake of it or to make yourself feel good. KPIs are only effective if you measure the right thing. Also, if you're an accountant or bookkeeper, I've got something just for you. I'm on a mission to help you work less and earn more in your business. To find out how, simply follow the link below. If you want to learn more about the Accountants Wealth Academy, what it has to offer your accounting or bookkeeping business, and the results that others have got, then simply click on the link below.